Welcome back, everyone, to another deep dive. Today, we're going to be digging through a whole lot of corporate filings and investor reports to try and,
Unpack.
unpack exactly the story of Gravita India Ltd.
Yeah.
They're a recycling company,
Right.
but not just any recycling company. This one has some seriously big global ambitions.
Yeah. Gravita's growth has been really impressive.
Yeah.
I mean, going from just a single recycling unit back in 1992
Oh, wow.
to aiming to be a top 5 global player in just a few short years by 2026, that's pretty remarkable.
Yeah, that's a huge glow up. And we're talking about a company that started in Jaipur, India,
Right.
and now wants to make its mark on the whole world. And to really understand how they're doing, we're diving deep into their filings to the Bombay Stock Exchange and the National Stock Exchange of India.
Yeah, we've got a lot to go through.
We do. We've got their investor presentations, financial results, even the auditor's review. So
Yes.
consider this your shortcut to understanding Gravita.
Right. And it's a story that really begins with their founder, Rajat Agrawal. He started Gravita with a vision to be the most valuable recycling company globally.
Okay, but hold on. Recycling can be a pretty broad term. What exactly is Gravita Recycling?
So they've got a pretty diverse portfolio.
Okay.
Right now they're working with lead, aluminum, plastic, and rubber.
Okay.
But they're not stopping there. They're also planning to expand into recycling lithium-ion batteries, steel, and even paper.
Wow, that's like a whole recycling enchilada.
Yeah.
But I guess it makes sense. Diversifying means they're not betting everything on just one material, especially as the world is moving more towards sustainability.
It's a smart move, especially when you think about things like the electric vehicle boom. Lithium-ion batteries are going to be huge.
Right.
And Gravita wants to be right at the forefront of recycling them.
Yeah, it's like they're capitalizing on those emerging trends.
Exactly.
So speaking of smart moves, let's look into their recent performance.
Okay.
Their Q2 2025 financials are showing some pretty impressive year-on-year growth.
Yeah, they've had some really strong numbers.
What kind of numbers are we talking about here?
Well, their volume grew by 8%, revenue jumped by 11%,
Okay.
and their EBITDA, that's earnings before interest, taxes, depreciation, and amortization, increased by a pretty substantial 27%.
Wow.
Even their PAT, or profit after tax, is up by 24%.
Okay, those are some serious numbers. It sounds like they're doing something right.
Mm.
What do you think is driving this growth?
Well, one key factor is their focus on what they call value-added products.
Okay.
Instead of just recycling basic materials, they're creating customized alloys, specialized plastic granules, things like that.
So they're adding value,
Yeah.
not just recycling.
Right. And these higher value products contributed to almost half, 47% of their total revenue this quarter.
Okay, so they're not just recycling, they're basically upgrading.
Exactly.
And I bet that also helps them get better prices and profit margin.
Absolutely. It's a classic example of moving up that value chain. It makes them less vulnerable to fluctuations in those raw material prices because they're offering those specialized products that customers will pay a premium for.
Okay, so they're doing well now, but what about the future? What are their plans for the future?
Well, they have a pretty ambitious plan.
Okay.
It's called Vision 2028.
Yeah.
And it's all about aggressive growth. They want to more than double their current capacity to reach over 500,000 MTPA by fiscal year 2027.
Hold on, MTPA. What is...
Oh, right. MTPA stands for metric tons per annum.
Okay.
So it's basically how many tons of material they can process each year.
Got it.
And to achieve this growth, they're planning to invest over INR 600 crore,
Okay.
which comes out to about 73 million US dollars by 2027.
Wow, that's a lot of money. They must be pretty confident in their ability to grow.
They are. They're projecting a 25% compound annual growth rate in volume and a 35% growth in profitability.
Wow.
And they're also aiming for a return on capital employed of over 25%.
Okay, so they want to grow bigger, but what about their geographic reach? Are they staying put in India or are they looking to expand elsewhere?
It seems like global domination is the goal.
Okay.
They're already operating in Asia and Africa, but their latest move is a big step toward entering Europe. They've signed a memorandum of understanding to acquire a tire recycling company in Romania.
Wow, Europe, that's a huge leap. What's the thinking behind this global expansion?
Well, it's strategic on several levels.
Okay.
By having a presence on multiple continents, they're reducing their reliance on any single market.
Okay.
They can also source materials more efficiently, taking advantage of those regional price differences.
Makes sense.
And, of course, it gives them access to whole new customer bases.
So diversification, cost optimization, and market penetration.
Exactly.
All in one, it sounds like they're building a pretty resilient business model.
Absolutely. And they're also taking steps to mitigate the risks that come with those commodity price fluctuations.
Okay.
They use a system called back-to-back hedging, which basically means they're locking in prices in advance to protect their profit margins.
Uh-huh.
Yep.
So that's how they avoid those wild swings in commodity markets.
Exactly.
Smart. But, it's not just about business, right? Sustainability is a big part of their story, too.
Absolutely. They're not just talking the talk when it comes to ESG, environmental, social, and governance.
Right.
They're walking the walk.
Yeah. What are they actually doing?
Well, one of their big wins has been a 27% jump in renewable energy power generation year on year.
Wow.
They're also reducing their reliance on fossil fuels. Actually, they have zero use of heavy fuel oil in their operations now.
Okay.
And they're even testing out new technologies like an electric refining furnace,
Yeah.
which could really cut down on their carbon emissions.
Okay, so they're really taking a multi-pronged approach
Right.
to reducing their footprint.
Good.
What about the social and governance aspects of ESG? Are they doing anything noteworthy there?
Absolutely. They've reduced their water intensity by 4%,
Okay.
which is significant considering the water challenges in a lot of areas. They've also increased the number of women in their workforce, which shows they're committed to diversity and inclusion.
Good.
And they're providing full health insurance coverage to all their employees,
Okay, that's great.
which shows that they actually care about their well-being.
It's impressive to see a company so actively incorporating sustainability into their business.
Yeah, they even have a very detailed ESG roadmap with short-term, midterm, and long-term targets.
Oh, wow.
They're aiming for things like a 10% reduction in energy intensity by fiscal year 2027, water neutrality for their Indian operations by fiscal year 2034, and they're even shooting for net zero emissions by 2050.
Wow, so it's not just a feel-good initiative for them, it's a core part of their business strategy.
Exactly, and it's becoming really important for investors and consumers who are looking to support businesses that are doing the right thing.
So it makes you wonder if this focus on sustainability is actually boosting their financial success, too.
It's hard to say definitively, but there's more and more evidence that suggests that companies with strong ESG performance tend to do better in the long run.
Mm.
They attract more investors, appeal to more customers, and often have lower operating costs because of their efficiency and resource management.
So it's a win-win-win.
Exactly. Good for the planet, good for the people, and good for the bottom line.
Okay, so it sounds like Gravita is hitting all the right notes, strong performance, an ambitious growth plan, and a real commitment to sustainability. No wonder investors are taking notice.
Yeah, but before we get too carried away,
Okay.
we do have to acknowledge a couple of issues that were raised in the auditor's report.
Okay.
There were some concerns about employee benefit expenses
Okay.
and a customs dispute that we should at least touch on.
Okay, let's not shy away from the hard questions.
Yeah.
What exactly are these concerns about the employee benefits and the customs dispute?
Well, the auditor thinks that Gravita should have treated a gain from a share sale by their employee welfare trust as an employee benefit expense.
Hmm.
But Gravita's arguing that the trust is a separate legal entity and their accounting was done correctly.
Okay.
As for the customs dispute,
Yeah.
it involves a demand order related to some alleged violations of import conditions.
Okay.
Gravita is contesting this, saying they haven't done anything wrong.
Hmm.
So it's an ongoing legal battle.
So some potential red flags, but it's important to remember that Gravita is disputing both of these issues.
Right.
We'll have to see how they all play out.
It'll be interesting to see.
Yeah, so we have a company with strong performance, ambitious plans, a commitment to sustainability, but also some open questions.
It's a mixed bag.
It is, as with most companies. But I'm curious to dig a little deeper into their operational strengths and global expansion strategy.
Yeah, me too.
What do you say we move on to their operational excellence and global footprint next?
Let's do it.
Okay, so let's dive into the nitty-gritty of how Gravita actually operates. We've talked about their big goals, but how do they actually make it all happen?
Well, they've got this massive global network. I mean, we're talking over 1,700 touch points around the world,
Wow.
and they've completed more than 70 turnkey projects for clients globally.
That's a pretty impressive reach. So it sounds like they're really in tune with those recycling markets everywhere.
Yeah.
What about their capacity utilization? Are they actually using all of their recycling plants to their full potential?
They're running at about 68% capacity utilization,
Okay.
which is pretty good for this industry.
Okay.
Plus, they've got a strong order book, meaning they have plenty of business lined up for the future.
Okay. So well-connected, running efficiently, and they have a full pipeline of work. What's their secret sauce? What makes them stand out from the crowd?
One key thing is their focus on customized and value-added products.
Okay.
So they're not just churning out those generic recycled materials. They work closely with clients to develop solutions tailored to their specific needs.
So it's like a bespoke recycling service.
Exactly. And this approach helps them build those strong relationships with clients and command premium pricing. It also connects back to that hedging strategy,
Right.
which helps them deal with those unpredictable commodity prices. By locking in prices, they can offer more stable pricing to their clients.
Yeah.
That makes them a reliable partner.
It's all coming together now. They're creating this more stable and predictable business by zeroing in on value-added products, those long-term partnerships, and of course, strategic hedging.
Hmm.
But let's step back for a minute and talk about the bigger picture. Gravita isn't just focused on financial success. They seem really committed to sustainability, too.
Oh, absolutely.
Yeah, we talked about their ESG efforts earlier, but what are some of the specific things they're doing to minimize their impact on the environment and, just operate responsibly?
Well, one of their biggest accomplishments is a 27% jump in renewable energy power generation year on year.
Okay.
They're also trying to rely less on fossil fuels, no heavy fuel oil in their operations at all anymore.
Good.
And they're experimenting with new technologies like that electric refining furnace,
Right.
which could really significantly reduce their carbon emissions.
Sounds like they're taking a multi-pronged approach to reducing their environmental footprint. What about the social and governance aspects of ESG? Anything noteworthy there?
Definitely. They've managed to reduce their water intensity by 4%,
Okay.
which is a big deal considering water scarcity in many areas.
Absolutely.
They've also increased women in their workforce,
Okay.
showing commitment to diversity and inclusion,
Yeah,
and they offer 100% health insurance to all their employees,
that's great.
demonstrating a genuine concern for their well-being.
Yeah, it's really impressive to see a company so actively incorporating sustainability in their operations. And it sounds like they have a pretty serious plan too. They have a detailed ESG roadmap
Yes.
with short-term, mid-term, and long-term targets, things like a 10% reduction in energy intensity by fiscal year 2027, water neutrality for their Indian operations by fiscal year 2034, and even net zero emissions by 2050.
They're thinking long-term.
It's not just a PR stunt, they're really weaving it into their core strategy.
It's becoming essential for investors and consumers who are looking for responsible businesses.
Right. It makes you wonder if this focus on sustainability is actually driving their financial success too. Are they seeing a return on those ESG investments?
It's hard to measure directly,
Yeah.
but there's growing evidence that companies with strong ESG performance actually outperform their peers over time. They attract more investors, they appeal to more customers, and often have lower operating costs because of their efficiency and resource management.
So it's a win-win-win, good for the planet, good for the people, good for business.
Exactly, and that's what makes Gravita's story so interesting.
Yeah.
They're showing that you can be profitable and sustainable at the same time.
Right, and they're setting a great example for others to follow.
But let's go back to their global expansion for a moment.
Yeah.
They're clearly aiming to become a big player on the world stage.
Yeah, that move into Europe is huge. What kind of challenges and opportunities do you think they'll encounter as they keep expanding?
But one of the biggest challenges for any company going global is dealing with different regulations.
Yeah, every country has its own rules.
Yes, exactly. Each one has its own rules about waste management, import-export, environmental protection. So Gravita really needs to understand the local laws in every market they enter.
It's not just about setting up shop anywhere.
No, they need to do their homework and make sure they're operating legally and responsibly.
Absolutely. And what about logistics? I mean, sourcing raw materials, managing shipping costs, making sure everything runs smoothly across continents. It's got to be complex and expensive.
It is. It's a balancing act. They need to use their global presence to their advantage to get the best prices and reduce costs,
Right.
but also be mindful of the challenges of operating in different markets.
So it's a calculated risk.
Yeah, but the payoff could be big. By expanding globally, they tap into new sources of materials,
New customer.
new customers, exactly, and reduce their reliance on any single market.
So more diverse revenue streams.
Right, a more resilient business model.
It sounds like they're really thinking strategically. What about the competition? Are they going head-to-head with other big recycling companies?
The recycling industry is getting more competitive, for
Oh.
sure.
Yeah.
Both established players and new companies are fighting for market share.
Right.
But Gravita has a few things that could help them stand out.
Like what?
Well, their focus on those value-added products and customized solutions.
Right.
That sets them apart from companies that are just doing basic recycling.
Okay.
They've also built a solid reputation for reliability and operational excellence.
Which is really important in this industry.
Oh, definitely trust and efficiency are key.
So it's not just about being the biggest or the cheapest. It's about quality service and building relationships.
Exactly. And their global reach gives them another edge.
Okay, how so?
They can source materials from all over the place, giving them flexibility if there are supply chain problems or market changes.
So they're kind of like the ultimate recyclers. They've got a really holistic approach.
That's a good way to put it. They're combining efficiency, global reach, and sustainability to offer something really unique.
But let's get back to those audit report qualifications for a second.
Okay.
We can't just ignore those.
No, we can.
What are the potential implications of those qualifications, and how could they impact Gravita's future?
Well, audit qualifications, they're never really a good thing.
Right.
They can raise questions about a company's transparency and how well they manage things internally.
Okay.
In this case, the issues they brought up have to do with employee benefit expenses
Uh-huh.
and that customs dispute.
Right. And didn't Gravitas say they're fighting those?
Yeah, they're saying he did their accounting right and that they didn't break any import rules. But the fact that these qualifications even exist,
Yeah.
investors are going to want to see how those issues get resolved.
So we'll have to wait and see how it all unfolds.
Exactly.
But big picture, it seems like Gravita's on a really interesting path.
Yeah, they got a lot going for them. The financials are strong, they've got ambitious plans, and a real commitment to sustainability, not to mention a growing global footprint.
Right. But they also have some challenges ahead, like navigating those tricky regulations, managing their operations all over the world, and of course, dealing with those audit qualifications.
It's a classic risk versus reward situation.
It is. They're aiming high, but they know there are obstacles along the way.
Exactly. And that brings us to the most important question. What does all of this mean for you, the listener?
Yeah. Let's bring it back home. Why should we care about Gravita's story?
Well, on a bigger level, Gravita's journey shows how important the circular economy is becoming.
Okay.
The world's realizing that we can't just keep using up resources like we have been without some serious consequences for the planet. Recycling and recovering resources are becoming essential, and companies like Gravita are leading the way.
So it's not just about Gravita. It's a much bigger shift in how we think about waste and resources.
Exactly. And as consumers, we have a part to play in all of this.
How so?
Well, every time we buy products made from recycled materials, we're supporting companies like Gravita and contributing to a more sustainable future.
So it's like we're voting with our wallets?
Yeah, we're telling companies that we care about sustainability
Right.
and that we want to support businesses that are doing their part to protect the planet,
And we can do even more than just buying recycled products.
right?
Yeah.
Oh, absolutely. We can advocate for policies that promote recycling and resource recovery support organizations doing good work, and even make changes in our own lives to reduce waste and be more responsible consumers.
So Gravita's story is a reminder that the shift to a circular economy isn't just about corporations or governments. It's about all of us.
Right. It's about the choices we make every day.
And maybe Gravita's success will inspire other people to come up with solutions for a more sustainable future.
It's a hopeful thought that business can be a force for good, creating positive change while still making a profit.
Yeah, that sustainability and profits don't have to be at odds with each other.
Right. They can actually work together.
Well said. So as we wrap up this deep dive into Gravita India Ltd, we'll leave you with one final thought. What role can you play in building a more sustainable future? Think about it. Until next time, happy deep diving.